All right, welcome to Talk Tickers. We are diving into Forrester's Q2 2025 earnings call. And we have to start with the number that really turned heads. So, the day after the earnings dropped, boom, the stock shot up over 12%. Now, normally a pop like that screams, amazing quarter. But with Forrester, well, the story here is way more interesting than that. And that's the big question, right? How does a company with falling revenue get a double-digit jump in its stock price? There's something else going on here. So let's dig in and find out what Wall Street was really seeing. Okay, so if you just look at the headlines, it looks great. It was a clean beat. They brought in about $112 million in revenue, which was better than expected, and their adjusted earnings per share came in at 51 cents, also beating the street. Look, in this kind of market, hitting both the top and the bottom line, that's definitely a solid win. But here's the twist. The reason they beat was because expectations were so low. When you look under the hood, every single part of their business actually shrank year over year. Research was down, consulting was down, but wow, the events business just got hammered, down a whopping 23%. That is a huge anchor on the whole company. And that trend points to a bigger problem. You got to look at what they call contract value, or CV. Think of it as a sneak peek into their future revenue. Well, that was down 7%. So yeah, the quarter was better than feared, but the underlying business challenges, they are definitely still there. So what's management's plan to turn the ship around? Well, they're laying out a three-part playbook. It's all about stability, fixing the sales process, and going all in on AI. Let's break each one of those down. First up, the stability play. Their big push has been to lock clients into longer deals, and it's working. Right now, 72% of their total contract value is tied up in multi-year agreements. That's a jump of 8 points from last year, which is huge. It gives them a predictable revenue stream, which is exactly what you want in a shaky economy.
All right, part two is the sales bed. And what's interesting here is that they don't have a lead problem. In fact, their sales pipeline grew by a healthy 15%. No, the issue, and management was pretty open about this, is actually closing those deals. So the new focus is all about quality, not quantity. They're getting managers in earlier to filter out the weak leads and really pushing the sales team to focus only on serious buyers. Basically, stop chasing deals that are never going to happen.
And number 3, the AI bet. This is a big one. Forrester's basically rebranding itself as an AI research company, and their generative AI tool called Izola is front and center. And you know what? Clients seem to be loving it. Just from last quarter, the number of people using it jumped 22%, and the number of questions they're asking the tool shot up by 44%. That shows they're not just talking about AI, they're actually getting it into the hands of their customers. And it's not just the fancy AI stuff either. Their core research is getting a refresh, and it's hitting the mark. We heard this great quote from a CX leader at a big wireless company. They said Forrester's new methodology was an immediate accelerator, and that it gave them a view that we so desperately need. That's a powerful endorsement. It proves that even with all the economic pressure, what they're selling is still super valuable to clients. Okay, we have to talk about that 12% stock pop again, because context here is everything. This jump did not happen in a vacuum. If you look at the last year, while the broader market, the S&P 500, was up around 20%, Forrester's stock got crushed. It was down almost 45%. So what you're seeing isn't necessarily a wow, things are amazing rally. It's more of a pew, things aren't as bad as we feared relief rally coming off a super low base. So let's circle back to the biggest problem child, that events business. The reason for that huge 23% drop, sponsorship spending is just really soft right now. So what are they doing? They're shaking things up with new leadership, and they're even moving one of their big European events from London to Amsterdam, hoping a change of scenery will spark some new interest. This segment is definitely the one to watch closely. All right, so when you put all these pieces together, the good, the bad, the ugly, what's our final call on Forrester? Let's get to our official rating and our outlook for what's next. Our rating on the stock is market perform. Here's why. They're doing a really good job controlling costs, and that stability plan with multi-year contracts is smart. But you just can't ignore the falling revenue and that massive drag from the events business. It really puts a ceiling on how high this stock can go right now. It is the definition of a show-me story. They need to prove the turnaround is real. So what are we watching for on the next earnings call? Well, our prediction is that contract value decline will get better, probably down to the low single digits. A couple things could push the stock higher. They're still buying back their own shares, and if that AI tool, Izola, keeps getting more traction, that's a big plus. But the risks are still there. If they can't fix that sales conversion problem, or if the events business gets even worse, the stock could easily head back down. So a possible way to play this? You could go long the stock betting on that turnaround story, but you might want to hedge that bet with some puts just in case the broader economy takes a dive and throws a wrench in their recovery plans.
And of course, remember, this is not financial advice.